What does the latest construction activity tell us about the real estate sector and about inflation? Hi, I'm Jeffrey Roach, Chief Economist for LPL Financial. And in this latest edition of the Street View podcast, I want to give investors some highlights on what trends are developing in the real estate space. Before we look at market performance, I'll set the stage with some highlights from the latest construction spending and what this would mean for home builders and inflation. We continue to see a divergence of construction activity between single-family versus multifamily dwellings. And clearly, growing multifamily construction activity is a good sign for renters in this country. The growth in condo and apartment construction means the supply of multifamily units will increase this year as more projects come to market. New multifamily projects will likely dampen rents as more properties come online this year. So the bottom line is this: rent prices will likely come down this year as supply of units grows. Industry data already showed declining rent prices, so it's just a matter of time before the official government statistics reflect the easing in rents. Investors and policymakers alike should expect a softening in housing-related inflation in the coming months. Now, from a company perspective, firms that are broadly diversified will likely benefit from greater activity in multifamily construction activity. This may be a reason why conditions are improving across the various components of the National Association of Homebuilders Index. And by the way, a bottom in builder sentiment would be a bullish sign for stocks. 4 of the 5 major bottoms in the Homebuilders Index since its inception in 1985 occurred near market bottoms. You can see Adam Turnquist's Feb 17th blog post on that topic. Now, 4 of the 5 periods also overlapped with a recession. The exception was the bottom in 1995, which coincided with the Fed's successful effort to slow the economy without inducing a recession. This is something I talked about in this week's Econ Market Minute, which you can view on the LPL Research YouTube channel. Despite all of the underwhelming housing data, the Dow Jones U.S. Homebuilders Index broke out from a bottom earlier this year and seems to be holding steady. Relative strength for the index remains somewhat bullish, as the index has been outperforming the S&P 500 since April 2022. It's important for investors to remember that despite weakness within single-family sector, activity in the multifamily space is fairly solid right now, and the equity indices seem to corroborate with this thesis. Well, that's all for now, but please continue to follow us on social media for up-to-date analysis on the investment landscape.